Welcome to Inside India. I'm Sri Jegarajah. Let's get you across the headlines this Friday. President Trump secures a major legislative win for his economic agenda as his big budget bill passes Congress. Focus now turns to tariffs and trade deals. India is racing to do a deal before the July the 9th deadline. India's market regulator bars US trading firm Jane Street from its domestic securities market, alleging market manipulation. And signs of resilience in India's services sector as growth climbs to a 10-month high, supported by demand both at home and abroad. Welcome. The Indian markets join us in about 45 minutes' time. Here's what Gift Nifty futures are indicating. We are looking at a kick-off in the region of 25,510. If that number does materialise for the benchmark, then that would represent a lift of about 100 points or so. The exchange rate, dollar rupee at 85.4760. We did get a private gauge on the country's services sector. HSBC's June services PMI indicating the sector grew at its fastest pace in 10 months as price pressures eased and demand rebounded both at home and abroad. Now, one of our top stories, the Indian market regulator SEBI has barred US trading firm Jane Street from trading in the country's derivatives market. This comes after investors' alleged manipulation by the quant firm. SEBI has also asked Jane Street to redeposit over $500,000 that Jane Street unlawfully gained from the Indian markets. Jane Street reportedly generated over $2.3 billion in revenue from India last year. The US company is disputing the claims made by the regulator. In a statement to CNBC, it said it will engage with SEBI and reiterated its commitment to operate in compliance with the regulations. I spoke to the chairman of SEBI, Tuin Kantapandi, in May. Here's what he told me about the crackdown on the futures and options market.
We had an excessive retail activity on some of the products, like index options only on the expiry day. The rest of the future and options are, in any case, going on. And
Understood.
On the index options weekly expiry day, we had an exuberant activity on the expiry day, which was creating some distortions.
So you were concerned that excessive speculation by retail investors in these parts of the derivatives markets could lead potentially to a market effect?
I mean, to that extent that, they have been losing money, and which is our study report pointed out over the last few years. So we are also cautioning.
CNBC TV18's Hormaz Fatakia joins us from Mumbai now to tell us more. Just how significant is this action by SEBI against Jane Street, Hormaz?
Pretty significant indeed, and this order, the interim order, was published on the SEBI website last evening, where they have barred Jane Street and its related entities from accessing the securities market, and these unlawful gains worth over $500,000 will be impounded, and these $500,000 is the largest sum that has been impounded in Indian capital market history. And since this is an interim order, this amount will be deposited in an escrow account where no debits will be allowed until prior permission from the regulator. Now, this issue goes back to last year, where the market regulator had asked the exchange, the National Stock Exchange, to probe any form of manipulative activity that Jane Street is conducting. The report was submitted in November of last year, and in December, SEBI had found that there were certain related entities that were running largest risks in cash equivalent terms in the F&O market, mostly on the expiry day. Now, cash equivalent terminology generally means liquid instruments that can be easily converted to cash and then used as collateral for trading purposes. Now, in February of this year, it was found prima facie that Jane Street was engaging in activities that were in violation of the SEBI regulations, and as a result of which the market regulator had asked NSE to issue a letter of caution to Jane Street, stating that to prevent them from taking any positions that could be manipulative in nature However, in May of this year, it was discovered that Jane Street continues to be in disregard to the letter of caution sent by NSE, and as a result of which this order was issued. Now, over the last 2 years, starting January of 2023 till March of 2025, Jane Street has made a profit of over $4 billion trading in just the Indian derivatives market, and this comes at a time when 9 out of at least 10 retail traders lose money in this derivative market. So a significant step indeed. Interim order for now, but SEBI has barred Jane Street from accessing the capital markets.
Hamas, so are there, or do you anticipate any immediate implications for the benchmark stock indices when they do open from a liquidity point of view? Is this, at first blush, something often negative? Does this imply that the regulator is doing what it sets out to do and curb excess speculation? And what sort of messages does it send out to foreign investors?
There will be implications, yes. The capital market names that are listed on the exchanges will definitely see some reaction at the start of the trading session. But the message is plain and simple, right? You may want to trade in the Indian markets. You are very welcome to do so. But you have to do that within the law of the land and within the regulatory ambit that has been laid out for you. And SEBI has made this very clear that this excessive speculative activity that has been taking place in the F&O markets needs to be curbed. And there have been enough and more steps that have been taken by the regulator to curb these activities when it is coming down to reducing the number of expiry days in a week as well. So implications, yes. Sir Jane Street has mentioned that they would be engaging with the regulator because they dispute the findings of the order. So it will be interesting to see what turn this issue ends up taking.
Homar's great reporting. Thank you very much indeed for those insights. Let's switch gears and take a look at the dollar index. The Indian markets and the currency will also be reacting to the latest jobs data from the US. This is what the dollar index is doing right now, 97.04. US economy added 147,000 jobs last month, more than the 110,000 expected. Unemployment rate fell to 4.1%. Therefore, expectations for a rate cut in July falling after that report. Treasury yields did climb. The US markets will be shut today for the Independence Day holiday. Big news, however, after the bell. House lawmakers passing President Trump's massive tax cut and spending bill in a major win for Trump's agenda. NBC's Ryan Nobles has more.
A major victory for the Donald Trump agenda.
The motion is adopted.
The House passing his multi-trillion-dollar sprawling spending bill designed to fund a wide range of campaign promises, including extending tax cuts passed in his first administration, new military spending, and money to fund a mass deportation plan, paying for it in part with steep cuts to food aid benefits, clean energy funding, and Medicaid. President Trump celebrating the win before flying to a victory rally in Iowa.
This is a great bill. This is going to be a great bill for the country.
The bill passed largely on party lines, with only 2 Republicans voting against it. One of those, Pennsylvania Representative Brian Fitzpatrick, who dodged NBC News' questions.
Why did you vote no?
Hi, how are you?
Good, how are you? Why did you vote no?
House conservatives balked at the changes made in the Senate, holding back their votes for hours, before they finally relented without a single thing in the bill changing. House Speaker Mike Johnson.
You think they caved?
No, I don't think they caved. Look, I think every member made a thoughtful and informed decision.
President Trump working the phones until the early morning hours. The holdouts say they got what they wanted.
Are you concerned that in the future, though, people won't believe that you guys are going to be a no on big issues?
No, I think they know we better be ready to they better be ready to deal.
Democrats did everything they could to delay final passage. Their leader, Hakeem Jeffries, setting a record by holding the floor for more than 8 hours, attacking the bill's overhaul of social safety net programs like Medicaid and SNAP, which could lead to millions of Americans losing access to coverage.
We were a hell no last week, a hell no this week, a hell no yesterday, a hell no today.
But Republicans argue Medicaid is in need of reform, and the bill is filled with the president's priorities, like eliminating taxes on tips and overtime. Republicans taking a victory lap following the vote. All smiles as one of the signature songs from the Trump campaign rallies played in the room.
In the meantime, we're still tracking what's happening on the trade front. Negotiations with India are in full swing, with a report suggesting that a mini deal could come in the next 2 days, while New Delhi's reservations on its agriculture sector have been a roadblock. Bloomberg is reporting that India might allow GM animal feed imports from the United States. Clock is ticking fast, however, on the July the 9th tariff deadline, with less than 1 week to go. Ahead of that, Trump is saying the White House will start sending letters to countries today, laying out the tariff rates they'll face.
So we have a couple of other deals, but my inclination is to send a letter out and saying what tariff they're going to be paying. It's just much easier. We have, far more than 170 countries. And how many deals can you make? And you can make good deals, but they're very much more complicated.
In the meantime, US Treasury Secretary Scott Bessent says he expects about 100 countries to get a reciprocal tariff of 10%, and saying he still expects to see a flurry of trade deals just ahead of the deadline. He also reiterated to our US colleagues that tariffs are not inflationary.
Thus far, we haven't seen any inflation from tariffs. And again, I would say that tariffs are not inflationary. You could get a one-time price bump, but in terms of a generalized economic inflation, I don't think that tariffs cause that.
Indonesia is also trying to get a deal on lower US tariffs ahead of next week's cutoff. JP Ong joins me now and has more on their latest effort, JP.
So you've got 3 days to July 9, and of course today's the 4th of July as well. 3 days till the end, till negotiations actually end on July 7th. You've got a number of possible ways to do it. Vietnam is closing the door on transshipped goods. We have India looking at a mini deal. And for Indonesia, they're saying they're putting together what I would term a big, beautiful purchase letter, actually, with regards to purchasing $34 billion worth of goods. This is according to Airlangga Hartarto, the Minister of Economic Affairs in Indonesia. It says he's spoken to business groups in Indonesia to try and cobble together a combined purchase order of American goods worth $34 billion to right and even capsize the trade surplus that they have, which stands at $19 billion. Now, this will mostly consist of about $15.5 billion worth of energy imports from the United States, and the rest of that possibly coming from agricultural imports of goods such as wheat, rice, for instance, and soybean, among others, actually. Now, it's going to be important, of course, because Indonesia is facing a tariff of possibly 32% from the United States. Now, remember, about a few weeks ago, about last week that is, Indonesia also said they're going to reduce and simplify the import restrictions and the import procedures for businesses such as those conducted by American business groups, because this is one of the things that the U.S. actually said. It's the non-tariff barriers, but in Indonesia's case, they say it's too darn complicated to do business, to import things into Indonesia. Please simplify that, and they've done that for at least 10 particular commodities. Will this be enough to entice the United States? Well, because of how close the deadline is, Sri, you'll have to go big or you'll have to go home. And if you put a $34 billion price tag on that purchase letter, or number actually, that could be enough to raise eyebrows at the U.S. Trade Representative Office and go like, okay, let's reduce the tariff. But again, it might not be a complete nullification of the tariffs. It might just be cutting it by half or less, as they did with Vietnam. But definitely the Vietnam deal at least gives a blueprint, not just for the likes of Indonesia, but also India as they race towards getting some form of a deal or a mini deal, as New Delhi wants, for instance.
JP, excellent. Thank you very much indeed for that. Coming up on the programme, we will dive deeper into India's energy security plans after a US Senator's proposal of 500% tariffs. You heard that right, on countries importing Russian oil. Probal Sen of ICICI Securities joins us after the break for that conversation. Do stay with us. Let's turn our attention to the energy complex now, and here's the state of play in the oil markets. The two global benchmarks, WTI and Brent crude, at 66.78, 68.48 respectively. Now, turning back to India, state-run ONGC has partnered with Japan's second largest shipping company, Mitsui O.S.K. Lines. Together, the two companies will build and operate two large ethane carriers. India has recently been trying to boost its energy security with purchases of carrier vessels and new strategic oil reserves in the works. Let's talk more about this with Probal Sen, Senior Research Analyst for Indian oil and gas sector at ICICI Securities. Probal, thank you very much indeed for joining me. First of all, let's start with Senator Graham's bill. If it is approved, then how prohibitive could Russian oil become for India, and what would then be the impact potentially on the public purse?
Just to put things in context, obviously the tariff, it's very difficult to put into numbers in terms of what the actual impact would be in terms of delivered cost of that crude. At this point of time, anywhere between 20 to 25% of India's crude sourcing is still coming through Russian sources, which, if I were to put into numbers, translates into, something like 1.3 million barrels of oil per day. If I look at India's overall consumption basket of close to 5 million barrels. So it's a significant number. Now, if this tariff is obviously put in place, which is, the 500% tariff, I'm not sure the tariff is calculated on transportation or on the absolute cost. Obviously, it means that, it becomes impossible to basically absorb that kind of cost into, in terms of the crude purchases. So, but it's a very, very big number, and it's very difficult to replace in a very short period of time. Obviously, India has multiple sources of crude. They have, multiple countries in the Middle East that they import from. They import now a significant number from the US as well. Some reports indicating that US imports have actually gone up significantly. So one would imagine that, that trend will actually continue as part of the tariff negotiations and or as a means of countering these apprehensions about them continuing to consume Russian crude.
Hardeep Singh Puri, the energy minister, in my conversations with him, he's been absolutely categorical. He's not going to budge, is he? There is a perception that India doesn't have a problem buying sanctioned oil from the Russians. But Mr. Puri, in my conversations, has been unequivocal. He feels that India is acting within international norms. He's not going to budge from this policy.
I would hesitate from commenting on what Indian government actions are going to be. But if you look at public pronouncements, as you rightly mentioned, India has been repeatedly stating that the amount of Russian crude that they are buying is within the laws that they believe they are subjected to, and the price that they're paying is also within the sanctioned limits that they are actually able to sort of comply with. So I don't want to comment too much on the Indian government's thought process or on the applicability of laws. But as of now, that has been the Indian government's pronouncement that it's not something that they're doing that's in any way not compliant with international laws.
I understand. Probal, can we turn to the role that energy is going to play within a US-India bilateral trade agreement? And there has to be a quid pro quo here. If India does commit to buying less Russian crude or halts imports altogether, then is there a pathway for discounted US LNG or discounted US oil cargoes to India as part of a trade deal?
Again, I think, as I mentioned, recent reports indicate that India's imports of US crude have actually gone up substantially in the recent months. And I believe that in any case, if you look at projections over the next decade or so, India will be the fastest growing energy consumer, specifically with respect to oil and even natural gas, pretty much around the world. And therefore, the requirement for additional sources of energy are going to keep growing up, in any case, over the next 5 to 7 years. Projections indicate that India's crude consumption alone, or crude imports, can actually go up by almost 1 million barrels a day over the next 5 years alone. So if you look at that, irrespective of what happens to the state of Russian imports, the requirement for, additional US energy exports can actually only go up. Even for LNG, if I look at the kind of growth that is there, in terms of the annual growth, there's about a 10% growth on a base of 200 MMSCMD that is expected over the next 5 to 7 years. To put that in terms of million tons of LNG, that's, around 6-7 million tons of LNG, assuming domestic supply doesn't supplant that. So, you're going to have a requirement for energy imports, and the US, with the kind of growth that it has shown and the ambitions that it has to become an even larger exporter of energy, I think that will be a natural partnership that will probably happen. GAIL already has a 5.8 million ton contract for importing LNG on Henry Hub based benchmarks, and they are looking for more deals. So I think that is something that will pick up momentum.
All right, let's talk about the deal making. And before we came to you, Probal, we were talking about ONGC and the partnership with Mitsui OSK Lines to build and operate ethane carriers. Are India's NOCs moving in the right direction strategically, and are we going to see more of these type of partnerships?
I would believe so. I think if you look at a few months ago or probably last year, ONGC also finally managed to enter into a technical support arrangements with BP, wherein BP is going to provide its services to ramp up and enhance production from some of the oldest fields that ONGC has. And BP has, the commitment that BP has made is a material accretion to the available production from those fields. So I think after a fairly long period of time, Indian NOCs are managing to bring in global partners for, their technical expertise or their, experience in handling more difficult terrains, more difficult geologies. This partnership to manufacture is probably a first of its kind. Just to, again, provide a context, OPAL, ONGC Petro Additions, which is now a fully owned subsidiary, petrochemical subsidiary of ONGC, that does require a huge amount of ethane to run its operations. So I think this is basically a bit to basically control all the parts of the value chain to probably enhance efficiency and create more sourcing security, across its affiliates. So I do believe that, as long as the comfort is there in the foreign partners, and that confidence is provided in the framework that is there, these arrangements probably will pick up with other NOCs coming into it as well.
Probal, how do you feel about this rewrite of India's 77-year-old oil field rules, which kicked in mid-April, I believe? To what degree is that going to drive energy independence in the longer term? And is the rule book now conducive to international upstream players coming in and investing and bidding for that acreage that may be up for grabs in India?
I think there's a couple of things that legislation does which we believe are positive. Number one, it provides much more of a security in terms of pricing. One of the concerns probably that foreign partners have had is that there has been a lot of price control across some of the categories of Indian energy market. And in this new legislation, Minister Puri was very categorical in saying that they intend to provide much more stability and transparency in terms of pricing norms across, over the tenure of the contract. Number one. Secondly, I think it also cleans up a little bit of mechanism in terms of arbitration or disputes as far as contract terms are concerned. And third, I think in terms of the changing of norms midway through a contract, I think these legislations also provide some more security as far as any arbitrary change in the term of the contract is concerned. So definitely I think it should actually encourage a lot more participation coming through. Obviously, the fundamental thing has to be that the prospects that are being offered have to be attractive enough for a global major to come in and invest his money. But from a regulatory standpoint, definitely, I think from pricing, visibility and arbitration, I think the new terms are definitely more encouraging in that regard.
Probal, just on that latter point, do you have a line or do you have any insight as to the prospectivity of the reserve potential offshore India?
I think, again, recently the minister kicked off a massive exploration drive by ONGC Oil India and other NOCs in the Andaman region. And I think there is a lot of optimism in the companies as well in terms of the prospectivity of these regions. They have not really been explored as of now to the extent that they should. Even in the Northeast, there are certain areas, that are covered by till now probably inaccessible forest areas or other offshore areas that were off bounds because of environmental or other reasons. So India is doing what it can to open up areas which may have high prospectivity, but as of now I think it's too early to really talk about any specific numbers till any exploration success happens. I mean, my guess is as good as yours in terms of how much oil or gas can be found in these. But definitely, directionally, India is doing what it can to open up areas which were not really available earlier and look at much more a more diverse set of geologies, let's say, in terms of trying to find new oil and gas reserves. So that is something that's definitely a positive.
Exactly, and also boosting strategic stockpiles. And India clearly still got one eye on that uneasy truce between Israel and Iran and the geopolitics. Probal, we'll leave it there. Great conversation, sir. Thank you for your time. Probal Sen, ICICI Securities. Coming up, the BRICS summit kicks off in Brazil this weekend, and the Indian Prime Minister will be in attendance. Why does it matter? We will discuss this after the short break. Welcome back. You're watching Inside India. Some of the stories that we are keeping tabs on outside of India. Thailand's deputy premier has been confirmed as the new caretaker prime minister, taking on the role after the suspension of Paetongtarn Shinawatra from her duties as PM over her role in a leaked phone conversation between her and Cambodia's influential former leader Hun Sen. Afghanistan's Taliban government announcing that Russia has recognised its rule, making Russia the first country to do so. The announcement came after Afghanistan's foreign minister met Russia's ambassador to Afghanistan in Kabul on Thursday. Meanwhile, the US continues to peel back restrictions on China. The latest, GE Aerospace, reportedly given the green light to start shipping jet engines to China's Comac. It follows similar easing from the US on chip, software and ethane exports to China. All this after Beijing agreed to to expedite rare earths export licenses following trade talks in Geneva and London. Bring it back to India. We're counting down to the market open over there. This is how we are shaping up. Let's give you a glimpse of Gift Nifty futures, which are suggesting an opening number in the region of 25,516. If that does materialise, then that is 100 plus points to the good, given where the benchmark left off at 25,405. Dollar rupee exchange rate, while we're at it, 85.39. A look at the broader Asian markets, and somewhat counterintuitive given the post-payrolls jump that we saw in the US markets. Payrolls, of course, coming a day earlier than usual because of the Independence Day holiday. And it's the Kospi and the TAIEX that are laggards at this point in time. Similar story for the Hang Seng Index as well. So it's a combination of tech and the Hang Seng perhaps taking a breather after marching to new highs and a bull market. We've got the Straits Times on our doorstep, possibly testing the level of 4,000 on the positive side of the ledger. New Zealand, Australia and the Nikkei in the money, but only just. Right, let's keep talking about critical minerals. Beijing's recent rare earth curbs have shown how much the world's EV, defence systems and advanced electronic systems depend on China's rare earths exports. Japan reportedly looking to diversify its supply chain by exploring deep-sea rare earth mining off the coast of southeast Tokyo. Lynn, can you walk us through what this project is and the challenges that come with it?
Indeed. So this is really the next step in terms of Japan's ambitions when it comes to deep-sea mining of rare earths. We have confirmation from Japan's Ocean Science Agency that in January of next year, they will be undertaking a pilot project where they'll be looking to extract rare earth elements from underneath the seabed at the greatest depth attempted so far. So really testing the limits, Sri, of current deep mining technology as well. In terms of the mechanics around this particular project, they'll be deploying their flagship vessel into the Pacific Ocean around one of their tiny coral atolls. It's called the Minami Torishima Island, where over the years, Japan's surveying and investigations have found an abundance of rare earth elements underneath the seabed there. The ship will then lower a custom-made pipe some 5,500 metres to that ocean seabed to collect the mud that sits under it, which should have these critical minerals in them. And so this is really significant for a country like Japan that is very resource poor to be able to potentially tap into some of these resources that sit within their exclusive economic zone. But certainly still lots of question marks around the viability of deep-sea mining because of the cost. The pipe itself, for example, Sri, reportedly $83 million, and also the impact that something like this will have on marine ecosystems and the environment as well.
And then, of course, rare earth minerals, the raw materials, aren't exactly rare, but it's the ability to process them for the end user that comes at something of a premium. And that's something that the world needs to work on in terms of the supply chain. Lynn, thank you very much indeed for that. And the Japan exploration also comes after Quad foreign ministers signed an agreement to diversify critical mineral supplies. India was also part of that agreement. In the meantime, next on India's agenda is the BRICS summit. That kicks off this weekend in Rio de Janeiro. Chinese President Xi Jinping and Russian President Vladimir Putin are not attending this time round. Their absence has thrown the spotlight on the Indian Prime Minister. Narendra Modi will be attending the event, followed by an official state visit to Brazil. He is on a 5-nation tour and stopped in Ghana before heading to Rio. Defence and security expected to be big topics during the tour. Let's get more on what to expect with the BRICS summit and India's role within it. Bring in Siddhartha Sanyal, who I'm afraid we are having some problems connecting with him. We'll take a short break and try to figure that out. Be back shortly. Welcome back. Let's pick up where we left off and India's role within the BRICS community as the summit kicks off in Rio de Janeiro. Siddhartha Sanyal joins us now, Chief Economist and Head of Research at Bandhan Bank. Siddhartha, thank you very much indeed for joining me on Inside India. How would you then characterise India's BRICS strategy?
Well, thank you very much for having me here. I think this is a very important summit. The BRICS group had been playing a very significant role in driving global growth in the recent past, and India had been at this moment seemed to be leading this particular pack, given the stable overall macroeconomic prospects and very stable political regime. I think at this moment, the focus from India's side will be on 2-3 major fronts. Very significant focus on the natural resources strategy in this particular discussion. A very significant focus on bilateral trade in national currencies. I think that particular aspect we'll get to see here. I don't really expect too much of a focus in terms of having a comprehensive BRICS currency in this particular meeting. But at the same time, there will be very significant focus from India's side in some of the areas like the language we use in case of terrorism, national security, etc. So overall, from the Indian point of view, it's a very important focus, important summit, and I think it's very important for all the nations as well. Some of the issues that will be discussed here, as well as which will be flagged by India.
Siddhartha, I'm sure you'll agree, it's a difficult balancing act for Prime Minister Modi and India in an environment where India continues to buy Russian oil, which it defends by saying it's acting within international norms, while at the same time potentially committing to buying more US LNG and oil under a bilateral trade agreement. The same goes for defence deals. It's being pulled in opposing directions by its allies, its former allies. Is India ultimately going to have to choose who their preferred strategic partner is going to be in the long term? And who then do you think that will be?
No, I'd rather tend to think that India had done well in terms of balancing the priorities, in terms of balancing, maintaining a very delicate balance with several strategic alliances. My sense is that we'll get to see that. In the overall global macro backdrop, we obviously see a lot of changes, a lot of very swift changes, big changes, including a wave of de-dollarization, including a wave of renewed focus on different kind of minerals and rare earth items. But having said that, I think the broader spectrum of overall priorities do not really change. The newer issues that India faces at this moment is some of the areas in terms of high-end agriculture, high-end some of the dairy products, etc. How exactly they deal with some of the bilateral trades. But I think there is very significant progress in this particular area. I would not really be surprised if we get to see something meaningful over the course of the next few days. Even vis-a-vis US. So overall, I don't think there will be a clear binary choice at any point in time, anytime soon.
Siddhartha, let's say for the purposes of argument that there is an interim US-India trade deal before the July the 9th Liberation Day tariff deadline. Is that going to throw shade or even jeopardize relationships between India and BRICS members, not least of all Russia and China?
No, I don't think that will be the case. My sense is that some kind of an interim trade deal in case of US and India is imminent, and it's happening with a number of other countries as well. In case of India versus US, vis-a-vis US, there is quite a few important areas that needs to be sorted. Both the sides understand that, and there has been some kind of de-escalation of tensions that we had seen in the earlier part of the year. So my sense is that there will be an interim trade deal relatively soon, some kind of a sane and very stable set of measures that might be announced. I don't think there will be something which will necessarily put a challenge to India's relationship with some of the other important strategic friends or some of the other important country groups that India is a very significant part of. Because in these country groups also there is a very significant role India plays. I don't think the other partners will also be jeopardizing that very quickly.
Siddhartha, how critical are defence deals as India quite clearly indigenizes defence manufacturing and exports more arms and munitions?
Yes, I think under the overall Make in India plan, there has been a significant progress that India has made over the course of the last few years. And defense-related manufacturing had been a very critical component or a very important integral component of that. We can see now that we have made a lot of progress in terms of very strategic developments in a number of areas within the broader defense spectrum. And in today's global order, it's very important for any particular country to have that. I don't think it has reached a stage where there is any significant conflict with any of the strategic partners or any of the other potential partners. So I think a very important balance, both strategically or in terms of how exactly you carry it out, has been maintained over the course of the last few years. And I don't really see any big change in that particular aspect. So India will possibly continue to be a very significant, sophisticated manufacturer of defense items, and will actually continue to grow in the export market in this particular area as well.
Interesting. On balance, Siddhartha, do you feel Make in India is working? Does it need to be reset, reformulated? And who then is the preferred partner in terms of really amplifying the move towards advanced manufacturing, which is what India is really trying to aspire to?
Well, I think the Make in India program has really been a very significant success. Quite silently to start with in the initial years, but at some point of time we get to see the momentum in this particular area. We get to see how India has progressed on electrical and electronics and engineering goods. We get to see how exactly India had been producing a lot of sophisticated electronics items, including mobile phones, chips, etc. As well as we get to see how exactly we are taking a bigger role in terms of defense manufacturing, defense exports, etc. So overall, I think the journey had been very meaningful and very impactful, both in terms of our internal growth momentum, in terms of strategic priorities, and as well as our association with a number of other strategic partners. I think I don't really see any major overhaul in terms of strategy is imminent. However, it has always been the style of the government to keep on making small adjustments going ahead, all along. And I don't really think that particular pattern will be changing. So overall, I feel very positive about this particular area as well, that overall Make in India part and India's ability to produce more and export more in some of the areas which had traditionally not been the area of strength for this particular economy.
It's been quite remarkable, hasn't it, Siddhartha, that Prime Minister Modi and his team have been really four sheets to the wind. They've been embarking on a flurry of diplomatic and commercial activity with existing and new strategic partners globally. Whether it's with the BRICS, there's momentum there. Whether it's with the Middle East and that GCC economic corridor, there's momentum there. And then, of course, there's the triple crown of trade deals, whether it's with the UK, EU, UK already in the bag, EU, and potentially the US. So at what point are we going to see an FDI boom?
Well, I think at this moment, you summarized it very well, really, that the key success of policy making of late had been prioritizing domestically on a number of right set of areas. From a pure macro point of view, we see a lot of stability in the Indian economy at this moment. The traditional worries of high inflation seem not to be there. The traditional worries of high twin deficit don't seem to be there. So in that kind of a situation, we see a lot of stability, and the banking system also seems to be on a very, very strong footing. So overall, we see a lot of parameters which really gives us confidence in terms of long-term economic stability and momentum in this particular economy. Given the current global order, the export cylinder is occasionally firing on a full throttle, occasionally not. But I think that is the new global order for the next several years, and we have to accept that. In that kind of a situation, a country which will be having a stronger footing in terms of its domestic economic performance will always have a very significant advantage. And my sense is that India is enjoying that at this moment, and going ahead, I'll not really be surprised if maybe a year down the line, we get to see stronger momentum on the FDI front. Some of the areas which keeps on bothering us is possibly some of the weather-related aberrations where India has seen larger than fair share of disruptions of late. But I think these are some of the areas where we have to be prepared to deal with. And I see some of the policies being adopted not only by the national level government, but by a lot of local and regional governments as well.
Siddhartha, so add it all together, and is this all consistent with 6.2, even 6.5% for fiscal 25-26?
Well, I think somewhere in the range of 6 to 6.5% growth rate is kind of very likely, and which should be seen in the current global environment should be seen as a very strong momentum. But the bigger point is that this particular growth rate and momentum is not coming on the back of a lot of fiscal stimulus or monetary stimulus. Rather, we have actually retained a lot of headroom in that particular in terms of some of the stimulus which we could have otherwise used and gained growth or borrowed growth from future. So my point here is that while growth momentum and growth numbers have been good, the bigger point is that this growth has come with a lot of focus on the foundation and supporting long-term potential growth, which is more heartening.
Siddharth, the final question, what could go wrong with this present setup? There is an uneasy truce to the Israel-Iran conflict, and that is clearly why India is replenishing and even building its strategic oil stockpiles. There is an uneasy truce also to the India-Pakistan confrontation, which is why India has been ramping up defence manufacturing and defence spending quite naturally. Do you see a resumption or a flare-up in either one of those geopolitical episodes?
On the India-Pakistan front, I will be surprised if we really see any flare-up of the tension in the near future, unless there is some very major incident or instigation all of a sudden. But generally, I think both the sides have been acting a little more responsibly of late, and I'll really be surprised if there is an immediate flare-up. On the broader geopolitical picture, we all have been dealing with a lot of uncertainty and moving parts in the last few years. Possibly that is turning all policymakers a little wiser. Having said that, maybe over the course of the next few quarters, we all need to be very, very watchful. But my sense is that given the performance of the domestic economy, given the performance of a relatively balanced alliance formation in case of India, the vulnerability in case of India will be far less compared to so many other emerging markets and so many other countries. So that way, along with strong domestic economic performance, strong policy focus, political stability, I think these factors will also play some kind of a tailwind for India rather than anything else.
Siddhartha, always valuable catching up with you. Thank you very much indeed for joining me with your insights. Siddhartha Sanyal there from Bandhan Bank. Now, Indian markets have joined the trading day. Let's take a look at the benchmark Nifty 50, which is holding the line at 25,410. The dollar-rupee exchange rate at 85.37. So the Indian rupee looking ever so slightly stronger against the US dollar. Some nervousness, however, after the Indian market regulator SEBI barred US trading firm Jane Street from trading in the country's derivatives market. We were talking about this earlier. This is after investors alleged manipulation by the quant firm. US companies disputing those claims made by the regulator. In a statement to CNBC, it said it will engage with SEBI and reiterated its commitment to operate in compliance with the regulations. Indian government bond yields, in the meantime, are looking like this. The benchmark 10-year yielding just around 6.3%. On the shorter end of the curve, 2-year bonds yielding 5.7%. Let's take a closer look now at some of the movers in the Indian markets today. Earnings season is underway. This is what shares of PC Jeweller are looking like. Strong session, up by 3.5%. The Indian jewellery maker posting an 80% jump in quarterly revenue. Company also has reduced its outstanding debt by 7.5%. Moving on to FMCG giant Marico, Q1 revenue growing in the low 20s thanks to improving demand in rural India. That's been a theme that we've been exploring and breaking out throughout Inside India on our programme. Marico said demands for its product in urban areas remain stable. However, it expects rising input costs to put, quote, incremental pressure on gross margins in the near term. Marico stock up by nearly 4%. Another consumer business spin-off in the markets. Indian conglomerate Reliance plans to separate its consumer business unit. The new entity will be called New Reliance Consumer Products. So far, the business that includes many snacks and soft drinks was part of Reliance's retail arm. For this unit, Reliance aims to target investors that specifically look at capital-intensive consumer businesses. Right, before we go, some Friday fun. A stranded British F-35 fighter jet has become an unlikely poster child for tourism in India's southern state of Kerala. The jet made an emergency landing on June the 14th and has been grounded ever since. But a viral AI-generated image of the plane amid coconut trees sparked laughter online. Kerala's tourism department jumped on the trend, saying it is all in good humour and creativity. UK is now working with Indian officials to move the jet to a maintenance facility. I hope he stopped off and tried the seafood, which Kerala is famous for. Right, that's it on the show today, but this week, that's all that we have. Indeed, the weekend comes early for us. Do keep watching CNBC. Access Middle East with Dan Murphy is coming up next.